Recently, yields in the Nigerian Treasury bill and bond market reached an all-time high. Some people would describe it as a windfall. For instance, in the Treasury bill market, yields went from 8.3% at the beginning of the year to almost 22.1% sometime in July. Similarly, in the bond market, yields on the 10 years Nigeria Treasury bond went from about 13% at the beginning of the year to almost 22%. In fact, over 22% at some point in July. Now, although these rates have dropped for about 1% from these all-time highs, they still remain relatively high, trending over 20% in the last 1 week or so. However, events in the market indicate that these rates may be poised for a descent. If you have been tracking the DMO's Treasury bill and bond auctions in the past 2-3 months, you would notice that the DMO has been trying to strike a balance between sustaining investors' interest in the debt market and systematically bringing down these rates. Just last week, we saw the Nigerian inflation halt its ascent since December 2022. In July, the inflation rate dropped to 33.4% from 34.19% the previous month, that is in June. This may have given the central bank a window to commence cutting interest rates, or at least holding interest rates steady at the current level of 26.75%. And pronouncement from the U.S. Federal Chair, Jerome Powell, indicates that the U.S. Fed is poised to cut interest rate by between 0.25% and 0.5% when they meet in the second week of September. Now, the U.S. cutting rate has implications for the stock and bond markets around the world. On this show, I will show you how an interest rate cut, whether in Nigeria or in the US, will affect you and your portfolio. Again, on Monday, the federal government, through the Debt Management Office, launched a $500 billion domestic USD bond targeting Nigerians living in Nigeria, foreigners resident in Nigeria, and Nigerians in diaspora. This unique bond, a first-time issuance in Nigeria, has its coupon at 9.75%. I'll be bringing you all you need to know regarding this bond. Then the Nigeria stock market saw a decline for 2 weeks running now. Last week, the all-share index shed 1.8%, and bringing the year-to-date return on the NGX to 28.35%. However, one company that has not slowed down this year on the NGX is Oando. Last week, Oando completed a $783 billion acquisition of the assets of Nigeria Agip Oil Company. I will be bringing you everything you need to know about this particular deal. And then on the foreign scene, following comments by the US Fed chair that oil is set for a rate cut in September, the US stock market continued to rally. The S&P 500, the Nasdaq, and the Dow Jones all rallied last week. Particularly, the home development companies listed on the S&P 500, we saw them all rally last week. I'll bring you everything, all the information you need to know from the foreign markets. It's another episode of Market Tape, so play the music. Welcome to a brand new episode of Market Tape. This show is for anyone looking to stay up to date with the Nigerian and global capital markets. I will bring you weekly insights and analysis and show you how you can use them to enhance the performance of your portfolio. Make sure you subscribe and hit the notification button so you never get to miss any of these shows. So unfortunately, we couldn't bring you this show last week. It was basically due to factors beyond me, but it's on me ultimately, and I'll make sure that I minimize how often that happens. I mean, the goal is to make sure that every week I'm here and bringing you the latest news and insight and analyzing them and making sure that you don't miss out on anything. So this is on me, and I will ensure that it doesn't happen again. Before I get into the show proper, just a few disclaimer that nothing said here, no recommendation, no comment made on this show should be construed as an investment recommendation. Investing comes with a lot of risk, and you want to make sure that you account for risks that are particular to you and risk that you face investing in the market. You want to make sure that you account for all this before putting any of the comments I make here to action. So it would be nice to speak with an expert, your investment advisor, before putting any of my comments here to work. Also, note that I may own positions in some of the companies that I discuss on this show. For details of companies where I own investments, you can go to the description segment of all our platforms to get details of those companies where I hold investments. This will help you evaluate the objectivity of everything I say on this show. So with that out of the way, let's get into the show proper. The first thing I'll be touching on is the issuance of a 500 billion domestic USD bond by the federal government. Started last Monday, 19th of August, and will be closing on the 30th, that is on Friday. This particular issuance is one that everybody has been waiting for. For a long time, the federal government has been eyeing USD balances in domiciliary accounts in Nigeria. And from the previous administration, from the era of Godwin Emefiele, the contribution of Nigerians in diaspora has shown to be very pivotal in the stability of exchange rate in Nigeria. So the core objective of this issuance is to attract funding from monies in domiciliary accounts and Nigerians abroad in foreign currency. So if you're investing in this particular one, you're investing in a foreign currency, the US dollar, your coupon will be paid in USD, and the principal at maturity, which is in 5 years, will also be paid back in USD. And the government also announced that the coupon rate will be 9.75% and paid semi-annually, meaning that every 6 months, you are going to get 1/2 of 9.75% paid directly to your domiciliary account. And this bond will be warehoused in CSCS accounts for individuals and at CBN for institutional investors. So that is that on the feature of the Eurobond. But of course, I also need to touch on the risk associated with investing in a foreign currency. So if you're investing in a foreign currency, it comes obviously with some benefits in the sense that you are going to hedge against the devaluation of the Naira. Since last year, we've seen maybe over 300% devaluation of the Naira, going by the official exchange rate. And that has eroded the assets of many individuals and institutions. So a lot of people want to hedge against a continued devaluation of the Naira. But just as we have seen a devaluation of the Naira, it could also go the other way. an appreciation of the naira. So if the naira suddenly strengthens and begins to appreciate, that could potentially hurt anyone who is investing in a dollar-denominated instrument like this particular domestic USD bond. So you want to make sure that you are evaluating the likelihood that a depreciation of the naira will continue. So if you ask me, I would say that in the near term, I still expect some devaluation of the naira. But as I said, don't take this from me. You need to do your own personal due diligence and come up with your decision. Then also, obviously, there's the risk regarding the ability of the government to meet its own obligations. The government has said that coupons will be paid every 6 months directly into domiciliary accounts, and these coupons will be paid in dollars. As we well know, the government has limits to how much revenue it can generate in USD. Primarily, the Nigerian government generates USD revenue from crude oil sales with its partnership with these international oil companies. That is the primary source of FX for the government. And crude oil's revenue depends largely on the global price of oil. So you also want to evaluate the sustainability of the current price and also evaluate the risk that we could see a decline in oil price. So a decline in oil price could potentially compromise the government's ability to continue to meet these obligations. So you want to be taking that into account as you make this decision. Also, the risk of a default. The government, if it runs into certain revenue issues, it can't raise enough USD to meet its various obligations, may maybe consider reorganization of some of its debts and could potentially default in an extreme event. But I said extreme event. Yeah, but it's important you know that governments could default on their obligations. So one difference between this particular domestic USD bond and the Euro bond that is traded in the market is that this particular issuance is for Nigerians primarily. Nigerians who live in Nigeria, foreigners who live in Nigeria, and Nigerians who live abroad. It's not for international investors. The one for international investors is the Euro bond that we have currently trading in the market. It has maturities from 2025 to 2051. There are different maturities you can find trading in the market today. Now, if the government were to consider defaulting on any of these obligations, it will be less costly for them to default on the domestic USD bond because now it's just Nigerians, and it will be easy for the government to make a case for a reorganization of the debt. But they could say, okay, we're going to pay everybody in Naira. After all, we are Nigerians and we spend Naira primarily. But making such judgment in the Eurobond market that has international investors, institutional investors from all over the world may be a bit more tricky for the government. So you also have to keep that in mind. However, retail investors cannot or have limitations in participating in the Eurobond market. But however, this domestic issuance gives opportunities for retail investors to get a slice of that market and hedge against a currency devaluation. The minimum is 10,000 USD. So it's something to keep in mind, really. Something to keep in mind as you consider whether to make this investment. There are options, really, for those who can. You can choose between investing in the Eurobond market and investing in this particular domestic USD market. And that leads us to the next discussion. It does appear as if we've seen the peak of interest rates. I'm going by the comments of the U.S. Fed chair at the Fed's economic conference in Jackson Hole, Wyoming. Mr. Powell said, and I quote, "The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risk." So if I evaluate that comment, it does appear as if, the whole market believes that we're going to see a rate cut come September 12th. What we don't know is the size of the rate cut, and the Fed chair is saying the size will depend on the incoming data and what they feel about the economy, the U.S. economy. We've seen inflation come at 2.9%, closer to the U.S. target rate of 2%. However, the last unemployment rate report that we saw indicated a 4.3% unemployment rate, higher than 4.1% that was projected initially. So it does appear as if we're seeing some weakness in the U.S. economy, and it's the level of this weakness that will determine how much interest rate cut the U.S. Fed is going to implement come September the 12th. So inflation, as we know, is very bad. It's bad for individuals, it's bad for businesses. It hurts your salary. It hurts businesses because those who depend on borrowing to run their business will suddenly find out that they're borrowing at a much higher rate compared to what was normal. In Nigeria, for instance, we've seen interest rates go over, that's lending rate by banks, go over 30%. So the stock market particularly does not like a high interest rate. So, but what we are waiting to see in September is by how much is the Federal Reserve going to cut rate. Most analysts put the number between 0.25 to 5%. As we know, the U.S. implemented, I think, about 22 rate cuts between 2022 and last year, 22 rate cuts, taking the U.S. rate to almost to 5.5% actually. So that rate is very high, and the U.S. has a lot of roads to travel in terms of cutting back on rates and bringing the economy to a stronger growth level. So between now and the next FMOC meeting, we expect to see, I think the inflation figure will come out before that meeting, and then possibly we'll see retail numbers. And actually the Fed's most favored metric for measuring inflation, I think it's called the consumer price inflation. That report will come out before the next meeting. So it's going to give us more insight as to the exact course of action the Fed will take come September. So having said all of that, the stock market reacted very positively to that comment by the U.S. Fed chair. The market went up by, the S&P 500 went up by, I think, 1.45%. And a lot of interest rate sensitive stocks also went up. So the market wants to see a lower interest rate. And for me, I think it's another catalyst for a stronger performance of the U.S. market. And I also expect that this will also trickle to the Nigerian market. As you've seen, or as I said earlier on at the opening of this episode, we saw the Nigerian stock market come down to 28.35% year-to-date return. Part of the factors responsible for that is the rotation of investors from the stock market to the fixed income market. With rates at the level at which we are seeing it, a lot of investors will move some money around from the stock market to the fixed income market to take advantage of the rates we are seeing. Treasury bill yield is almost 27% currently, and that is a once in a lifetime kind of rate, but it does appear to me as if we are seeing a peak of that high interest rate cycle. I think we've gotten to the peak. If you ask me, the DMO, the Debt Management Office, by their action, is probably factoring in this expectation into their auction results. The last auction result we saw, I think the 2033s, we saw it close at 21.5%. Compared to the previous top rate, which was 21.98%, that number is lower. We also saw the 2031 close at 20.9 compared to 21% the previous auction. However, the 2029, where we don't have so much of activity, closed a bit higher, 20.3 compared to 19.89 at the previous auction. Also, it's the same story for the treasury bill market. The treasury bill market at the last auction closed at 20.9 for 1 year compared to 21.889 at the previous auction 2 weeks ago, or 2 weeks before that. Same for the 182 days and 91 days treasury bills. The 182 days closed at 19.3% compared to, I think 19.2% compared to 19.5 at the previous auction, while the 91 days treasury bill closed at 18.2% compared to 18.5 at the previous auction. Also in the US market, we saw the 10-year treasury yield come down to 3.8% from around 4.2%, which was the level it was for a very long time. So we may have seen the peak of interest rates. In the secondary markets, rates have been coming down, particularly in the mid-tenured maturities. You see rates dropping by, on the average, about 1% drop in rates. Yeah, so as we move towards September, when we expect this rate cut, I expect that barring any resurgence of the crisis in the Middle East, I expect that globally rates will start to come down progressively. And I think this is one window the central bank and the Debt Management Office have been waiting for. And I think they will use it, because as the rates in the US starts to come down, you're going to see some investors in those matured markets moving funds away from there to take advantage of the higher rates in emerging markets, of which Nigeria is included. And as you see these rates coming into our market, it's going to increase demand on Nigerian securities. And as the demand increases, you're going to see the DMO start to cut back on the auction rates, which should trickle to the secondary market also. So by and large, I think we've seen the height of interest rates in Nigeria, and indeed globally. At least for this round, we've seen the height of interest rate. So what should you do as an investor? Yeah, I think investors should now consider extending duration of their portfolio. So if you have a lot of money invested in 1 year, 2 year securities, you can extend your duration, go longer, buy the 5 years, 10 year securities to lock in those rates at the current levels. But I mean, again, this is this is just my opinion. Really, it's my opinion, and you should do your due diligence before taking this into account. So for me, I'll be extending my portfolio duration at this point, going longer to the mid-tenured bonds. The 2033s, 2034s. You have a lot of bonds in these maturities that are still yielding over 20%. That is where my interest is at the moment. And also, you could see more funds leaving the fixed income market to the stock market. As you see this rate start to come down, investors are going to start to move funds to the stock market again. Speaking of the stock market, last week we saw the S&P 500, that is the US market, go up by 1.45%. And particularly impacted were the interest rate sensitive stocks. If you look at the top 10 gainers last week, about 4 or 5 of them were real estate stocks, particularly home development companies. With interest rate at the high level we saw previously, many people are not buying houses, obviously, at such interest rates, because mortgage rates were much higher before now. But as those rates starts to come down, you expect that mortgage rates will start to come down and create more activity in the real estate sector, particularly for home development, home improvement companies. So the likes of Porty Group Incorporated, Mohawk Industries, DR Horton, Builders First Source, which added about 11.5% last week. These were the companies that primarily drove activities in the S&P 500. We also had contributions from Target. Target is the 6th largest retailer in the US, went up by 10.36%. They had their earnings report on the 21st, and that report beat expectations. So the stock went up by 10.36% last week. We also had Norwegian Cruise Line, which is another interest rate sensitive stock, going up by 8.43%. We also had Albemarle Corporation going up by 9.33%. This company particularly is into lithium production. Lithium has become a very big deal with the growth of EV industry, electric vehicle industry. That stock went up by 9.33%. So primarily what drove the US market last week was interest rate particularly, and then a few companies that outperformed with their earnings reports. Then speaking of companies that outperformed with their earnings reports, we also had Medtronic, which reported last week. They slightly beat revenue expectation by 0.25%, and also beat EPS expectation by 2.6%. Year to date, Medtronic is underperforming the S&P 500. It's only added 9.1% this year. Also, Palo Alto Network reported last week. They beat revenue expectation by 1.38%, beat EPS expectation by 1.18%. And year to date, the stock is up 18.9%, almost the same with the S&P 500. Another company that was in the news last week is Eli Lilly. Eli Lilly announced that their obesity drug, Zepbound, cut the risk of developing type 2 diabetes by 94% in overweight adults. And that was a very significant piece of information for the market. Eli Lilly is one company that has been doing very, 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 very well. In fact, it's one company I always look at, and I don't know why I don't really have it in my portfolio, because it's been on my radar. It's a company that I've followed for a very long time, but somehow, I don't have it in my position. Eli Lilly and Novo Nordisk accounts for over 50% of the market share in terms of revenue in the diabetes drug market. These two companies account for over 50% of the share of revenue in that market, both diabetes and obesity. Obviously, Novodisc has the leadership position in that market. So I've always looked at Novodisc more favorably compared to Eli Lilly. But for me, it's one stock that I need to consider adding to my position. And this new trial result also further consolidates their position in that market, in the diabetes and obesity market. So there is a particular substance in this drug, Zepbound, and another drug actually called Mojano, if I got it correctly. I'm not sure about this now. I think that drug is Mojano. So Zepbound is a drug used by obese adults to bring down their weight. And the drug is effective in terms of bringing down the weight of obese adults by 23%. And then the other drug, Mojano, I'm not sure about the pronunciation now, also is for diabetes patients. Now, this test found out that these two drugs can actually prevent diabetes, type 2 diabetes, by 94%, which is very, very significant. And if you look at it, these two drugs already are contributing about $4 billion in quarterly revenue for Eli Lilly. And this piece of information will only advance their position in that market in terms of growing their revenue, growing their sales. So for anyone who is looking to add names to their healthcare portfolio, this is one name that you need to look at and consider seriously. Year to date, Eli Lilly is up 64%. Novo Nordisk is up 33% year to date compared to the S&P 500, which is up 19.2%. But for Eli Lilly, one thing that worries a lot of us is the price to earnings ratio. And the PE ratio is, I think, about 112 currently. And that is very, very high. But, that is a trailing 12 months PE, But one thing I think I need to look at again is the forward price to earnings ratio to see the impact of future growth in revenue. What sort of impact is it going to have on the price to earnings ratio? But Eli Lilly is a company I like so much, and I think I can. For me, what I may do is to dollar cost average the stock from the current price, meaning buy it at the current price and see what happens. If there's a pullback, buy more. If it continues to ascend, buy more. I think that will be my strategy for Eli Lilly going forward. We also had reports about AMD, Advanced Micro Devices, acquiring ZT Systems. AMD is one of the leading names in artificial intelligence, one of the closest rivals to NVIDIA. NVIDIA is obviously the leader in that market, is the leader in that space by a wide margin. AMD sees this acquisition as an important step in its drive to rival and consolidate its position in the AI space. And like I said, NVIDIA is a clear leader in the AI market. And what NVIDIA has done is to go from being a chips designer to an integrated solution for artificial intelligence. So they not only design the most advanced chips in the market, but today they have the network also to power the entire AI value chain. So they have designed the chips, they have the computers, they have the networks to link these data centers, because AI is about data centers, and these data centers needs to be linked through the appropriate systems to function. So what NVIDIA did was to build that ecosystem that has the advanced chips, the computers, the computing power, and the networks to link these data centers together. So to me, AMD is only playing catch up in this market because with this acquisition, it allows AMD to now have a foot in the systems market. So I don't think too much of this in the near term in terms of competing with NVIDIA. Before you start to see this come to fruition for AMD, I think I need to see what happens in the next 1 to 2 years. And speaking of NVIDIA will be reporting its quarterly earnings on 28th. That will be on Wednesday. NVIDIA and CrowdStrike. These are two companies that I'll be looking out to see what happens in their earnings report. Obviously, NVIDIA, because NVIDIA is the market leader in the AI space, and whatever happens with that result will speak a lot to the progress we've made in the AI market. So I'll be anxious to see what happens with their report on Wednesday. And then for CrowdStrike, I think last month we saw the outage that affected a lot of Fortune 500 companies as a result of system issues with CrowdStrike, and that sent their stock coming down from almost 400 to I think it got 200 and something at some point. So they lost a lot of their price moves recently. So the stock is down, and this report will go to show how much that outage has impacted CrowdStrike. So I'll be looking to see what their earnings number comes to, and most importantly, the sort of guidance they provide going forward. It will be interesting to hear what they have to say about their earnings expectations going forward, because you want to think that there may be some repercussions for what happened. I think Microsoft will be holding a press conference later this month, to speak on the impact and their level of preparedness in case such occurrence happens again, because it did impact Microsoft. That outage didn't impact Microsoft. So you expect that there are companies that are going to probably look for solutions, alternatives to CrowdStrike. So I want to see how much impact that event will have on their earnings. So this week, those are the two earnings numbers that I'll be looking out for. And then to the Nigerian market, we saw the Nigerian market shedding 1.16% actually for the week. Year-to-date return came down to 28.35%. In terms of the sectorial contributions, the banking index was up 0.37%. Oil and gas up 3.54%. Consumer goods was down 1.42%. Insurance down up 1.9%, and then industrial goods led by Dangote down 4.94%. The all share index down 1.16% for the week. So I'll start with Dangote. Dangote went down by 10%. Obviously, Dangote Cement has had an incredible run this year. So I'll put that to profit taking. The loss of 10% last week, I'll put that to profit taking. One company that has also been in the negative a lot this recent weeks is Cortex. Cortex again went down by 37%. last week. But on the gainer side, RT Briscoe is leading the gainers chart with 59.41% for the week. Tantalizer up 54.55% for the week. To be honest, I really don't know what these companies are doing to see this level of returns in a week. 59.4% for RT Briscoe. That is huge. But to think that we don't really have so much information as to what is driving this this move is mind-boggling. Obviously, you also have Oando going up by 33.47%. I'll come down to Oando shortly. But for RT Briscoe and Tantalizer, what I do know is that these companies have been depressed for a very long time, and at some point you expect that you see some corrections. So that may be what is going on with two of them. If I have more information, I will definitely come back with those by next week. But the company I want to speak on is Oando. Oando is up 33.47%. And what is driving that move is the acquisition of the $783 million acquisition of Nigeria Agip Oil Company. Since this deal was announced sometimes last year, I think September last year, Oando has gained 770%. The stock has gained 770%. And the market seems to like this deal a lot for Oando. Oando is another company that has been depressed over a long period of time. The company has faced a lot of issues, revenue issues. They were suspended at some point by the Securities and Exchange Commission. They had litigation with one of their majority shareholders. So you had a period between, I think, 2015 to around 2022 that this company was struggling mightily. The company was struggling on all fronts in terms of issues with regulators and even operational issues. The numbers were not there in terms of growing their revenue and being profitable. But it appears that all of that has changed in the last 2 years. And coming on the heels of that, they got this deal finally approved. So what is Oando getting from this deal? Part of what the real attraction for them is the increasing their stake in a JV that they have with the NNPC. So they have this JV with NNPC and Agip, where Oando had 20%, Agip had 20%, and the NNPC also had 20%. Now, with the approval of this deal, it now means that Agip stake in that JV now goes to Oando, bringing Oando's stake to 40%, with the NNPC still having 60%. And this particular deal gives Oando the right to several strategic mining leads, OML 60, 61, 62, and 63. This deal will also increase Oando's total reserve to 1 billion barrel oil estimate. 1 billion barrel of oil estimate. And it also comes with 3 gas processing plants, 40 oil and gas fields, 24 of which are already producing, 40 identified prospects and leads, and 12 production stations, and 1,490 kilometer pipeline. So I think the summary for me is that it's going to accelerate Oando's participation in the upstream oil segment, and I think this is one thing they have been pushing for all along, to increase their investment in that industry. Like I said, the market likes this deal a lot. You wonder why their share price is up 770% since this deal was announced almost a year ago. However, one curious thing here for me is, why are these oil companies divesting their investment in the upstream sector in Nigeria? Because we've seen similar deals for Seplat and a couple of indigenous oil companies. I think there are two of them in my head right now. I can't remember the names of those firms. But we've seen increasingly these IOCs, international oil companies, divesting their investments in the upstream sector. Shell has divested, ExxonMobil has also divested, and a few other international oil companies have divested their stake in the upstream sector. And the reason they are doing this is because of the decrease in production primarily. We've seen oil production in Nigeria go down from 2 million barrels per day to, at some point, below 1 million barrels per day. As of July, we saw a slight improvement to 1.307 million barrels per day in terms of daily oil production for Nigeria. The decline in this output is what is really discouraging these international oil companies from further participation in that segment of our oil industry. And part of the cause for this decline in production, as we well know, is one, crude oil theft, and then hostility from host communities. We've seen a lot of pipeline vandalization and outright theft of crude in the Niger Delta region. So this is really discouraging international oil companies from further participation in the upstream segment particularly. The hope is that the indigenous companies would have better relationship with host communities, and then use their local knowledge, local advantage. We call it home advantage in football. Use their home advantage to have a better relationship with the host communities and to find a better lasting solution to the issue of oil theft, and pipeline vandalism, So the expectation is that the indigenous companies will do better where their foreign counterparts have failed, Whether they are successful in this is a discussion for another day. But particularly what I want to see from Oando, beyond the euphoria of this deal, is I want to see improved profitability margins. If you look at Oando's profitability margin, it's nothing to write home about, honestly, compared to the likes of Seplat Petroleum and Total Energies. They have one of the worst profitability margins in the entire stock market. You want to see an improvement of that. And as the CEO of Oando said, Wale Tinubu, he said this will have an instant impact on their cash flow, because it comes with a lot of cash generating assets. The OML oil mining leases 60, 61, 62, and 63, and of course the oil and gas fields, 24 of which are already producing, is expected to impact on their cash flow instantly. So I want to see how that improves their free cash flow, because their free cash flow has been very, very inconsistent, and then more operational stabilities in terms of revenue growth and profitability, and then how well they revitalize dormant assets that comes with this deal, because this deal also comes with a lot of assets that are not producing currently. How is Oando able to transform these assets to assets that will generate revenue for the company? I need to see that. Again, this also has impact on Nigeria as a whole. Because if they are successful, Oando along with other indigenous oil companies, if they are successful in terms of stemming the tide of oil theft and pipeline vandalization, it should rub off on the overall output for Nigeria as a whole. It could raise our oil production back to the long-term average of 1.8 million barrels per day. So these are the things I want to see from Oando. I do not know if the current price is justified. Again, for their PE ratio, looks decent currently, but I wouldn't be very aggressive in pinning my hopes on this deal. A lot needs to be seen for me before I form an opinion around Oando. People, this is where we call it a day on this show. Thanks for listening, and I hope you'll be here with me again on Monday as I take you through another important week. As I did say earlier on, we expect results from NVIDIA and CrowdStrike, along with other events in the global Nigerian and global capital markets. And I'll be here next Monday to take you through them. Thanks for listening, and don't forget to subscribe.